Hi, my name's Adam Walkom. I'm a partner at Permanent Wealth Partners, and this is a video for business owners to help them best plan their finances with some good tips around financial planning and best financial advice. So today I want to talk about, frankly, the lifeblood of all businesses, and that's cash. And that's think about keeping a working float and what companies can do with that cash. So typically, a successful business over time will actually continue to build cash in the company account, and then at some point that becomes unsustainable. That cash will continue to rise subject to the business doing well, and then either the owners will have to decide to declare a dividend, or they will have to effectively take it and invest in a new project or a new piece of or buy a new asset or something like that. But what if the owners don't? What if you don't want to do that? What if you don't need to buy a new asset? What if you don't want to go through the tax pain of paying out, significant dividends and or higher salaries? So here today, I want to talk about a couple of ideas you can use to make the most and get your company cash working as hard as it can. So let's say, let's give you an example here, but let's say, for example, this company has a cash surplus sitting in its account of something like 50,000 in its business banking account. Now, if your business banking account is anything like my business bank account, the returns you get on that account are pathetic. They are paltry, they are poor, especially with what's available right now. So there's a couple of different options of what you can do with this to try and improve this situation. And the first one I want to talk about is simply just using better savings accounts. So setting up a company savings account. So this company savings account, you can lock away the money in term deposits for 1 year, if you like, or you can have an easy access savings account. And something like, typically at the moment, I'm recording this at the end of August or start of September in 2023, you can get anywhere between 3 to say 5% on your cash. And so these are not bad options, but it just requires all you're doing there. You are moving company cash from the regular business account into a special savings account. There is no tax impact on doing this, and it just means you're getting the company to work harder. Just please note, any returns you do make will be classified from a tax perspective as revenue and will be kind of claimed as revenue. So that's something to think about. That's option one. Option two is a little more interesting. So this is where instead of opening a company savings account, you open a company investment account, and you can do this through most investment platforms, and this allows you to buy any sort of fund or shares or make company investments in the company name. So again, it allows for potentially higher growth. So these are going to be, think of these as market-based investments. So potentially higher growth. The average growth rate of the FTSE 100 and the average growth rate of the S&P 500 over the long term is 10% a year, or 9 or 10% a year, but that's subject to volatility, and so that's going to go up and down over time. And so the key part around thinking about the long term, the company investment account, is this is money that's designed for the long term. This is money that you don't want to access or potentially need to access in the first few years, because as we know, markets can drop very quickly. So when we think about this, the idea of the company savings account, this is effectively for sort of short-term money. This is where you can lock up your money for sort of thinking about 1 to 3 years, with the idea that that money is accessible for you. On the long-term investment with a company investment account, you're looking for higher returns, but typically you're looking at ideally having greater than a 5-year time horizon for this money. And the idea with a longer term investment is that this money is always accessible for you, but you don't want to be pulling it out when we're on a dip. And markets always go through cycles. We go through down cycles, we go through up cycles. And what you don't want to be doing is being forced to sell on a down cycle. And now again, tax implication, any gains you make on the company investment account, let's say you buy a market fund for 100,000, you then sell it a few years later for 120,000, that 20,000 actually then is classified as revenue from your through your accountant, and that you will effectively pay tax on that as if that is revenue. So that's just something to be aware of as well. So this is helping to answer the question, what to do with surplus company cash. If you think about it, when you think about it, all right, if you need the cash, you think in the short term, then I would stick with a short term, open a specific savings account and use the returns on that. If you don't need the money for a longer term, think about opening a longer term investment account using market tracker funds, which should provide a higher return over the long term, but are going to be subject to much greater value or variations in terms of the overall value over time. So just a couple of ideas from us. Look, if you've got any questions on that, please feel free to get in touch. My name is Adam Walkom at Permanent Wealth Partners. We specialize in financial planning for business owners. Feel free to reach out if you've got any comments. Thanks. Speak to you soon. Bye.